Sound of upbeat, professional intro music fades. Welcome back to the channel, traders and investors. Today, we're diving deep into a stock that's been lighting up our hard-to-borrow screener, ATPC Corporation, ticker symbol ATPC. We'll break down exactly why this consumer defensive stock, typically associated with packaged foods and health wellness, has become such a hot topic in the short interest world. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. ATPC Corporation, or ATPC, is an investment holding company focused on health and wellness products and advisory services primarily in Malaysia. They operate across segments like skincare, health and wellness, and even greener energy. With a modest market cap of just $4 million, ATPC is what we call a microcap stock, and it's been experiencing some explosive price action. Just today, ATPC shot up an incredible 57.54%, and over the last 5 trading days, it's gained a robust 45.96%. Looking at a slightly wider window, the last 30 days saw a decrease of 6.59%, which makes today's surge even more notable. The volume tells an interesting story too. Today's volume hit a staggering 23,072,159 shares, which is 6.4 times its 30-day average volume of 3,612,475 shares. This kind of sudden, massive volume spike often catches the eye of our hard-to-borrow screeners. Short chart of ATPC with price and volume spike highlighted. What is cost to borrow and why it matters? So, what does it mean when we say a stock is hard to borrow? When you want to short a stock, you essentially borrow shares from someone else, sell them, and hope to buy them back later at a lower price to return them. You pay a fee for this privilege, known as the cost to borrow, or CTB. This fee is like an interest rate, expressed as an annualized percentage. The higher the demand to short a stock, and the fewer shares available to lend out, the higher the CTB fee skyrockets. When you see a CTB fee exceeding 100% annualized, it means short sellers are paying an incredibly steep price for the right to hold their short positions. This signals that there's extreme conviction in the short thesis, or more often, a significant imbalance between the supply of shares and the demand from short sellers. Why this stock is hard to borrow right now. Now let's apply this to ATPC. This stock appeared on our screener for one compelling reason: its cost to borrow fee is an astounding 552.9% annualized. Yes, you heard that right, over 500%. Not only is the fee itself exceptionally high, but its momentum is also significant, jumping by plus 28 percentage points over just the last 5 trading days. This rapid increase suggests that the pool of available shares to short ATPC is shrinking fast and demand is intensifying. As of our last check, there were only approximately 15,000 shares currently available to borrow. Compare that to ATPC's estimated float of a mere 0.5 million shares, and you start to understand the incredible pressure building up. A tiny float combined with a shrinking borrow supply and sky-high CTB creates a highly volatile situation. Squeeze mechanics explained. This scarcity of borrowable shares is the bedrock of a potential short squeeze. Here's how it works: short sellers have to buy back shares to close their positions. If a stock's price starts to rise, perhaps due to positive news or just strong buying pressure, short sellers who are paying an enormous CTB fee on a stock like ATPC might get nervous. They might stop buying back shares to cut their losses and reduce their borrow costs. This buying activity from short sellers covering their positions adds to the existing buying pressure, which pushes the price up even further. This forces more short sellers to cover, creating a cascading effect of short squeeze. Our internal composite squeeze score for ATPC currently sits at 57.3 out of 100, which reflects this combination of high CTB, shrinking supply, and recent price and volume momentum. However, it's critical to remember that a high cost to borrow does not guarantee a squeeze. Sometimes, short sellers have extremely strong conviction in their thesis and are willing to pay those exorbitant fees to stay short, believing the stock will eventually fall. Dilution risk check. One major factor that can completely negate a short squeeze even with a high CTB is dilution. Dilution occurs when a company issues new shares, increasing the total number of shares outstanding. This typically reduces the value of existing shares and, critically for a short squeeze, can provide a fresh supply of shares for short sellers to cover their positions without driving the price up. We always check for this. For ATPC, our recent checks found no dilutive SEC filings such as -1, -3, or 424B within the last 90 days. We also found no recent reverse splits in our look-back window, which can sometimes precede or coincide with dilutive events. This lack of immediate dilution risk means one major headwind for a potential squeeze scenario is currently absent for ATPC. Important disclaimer: this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. For ATPC, continued monitoring of the cost to borrow fee and the availability of shares to borrow will be key. Any further significant increases in CTB or decreases in borrowable shares would indicate rising pressure. Keep an eye on the volume. Sustained elevated volume beyond its 30-day average will also be an important indicator. Given the micro-cap nature of ATPC and its relatively small float of 0.5 million shares, even small changes in buying or selling pressure can lead to dramatic price swings. Agape ATP Corporation, ATPC presents a fascinating case study in the world of hard-to-borrow stocks and potential short squeeze dynamics. Its incredibly high cost to borrow of 552.9%, shrinking borrowable shares, and tiny float make it the stock that demands attention for anyone interested in these unique market mechanics. Always remember to conduct your own due diligence and understand the significant risks involved with highly volatile microcap stocks. If you found this breakdown of ATPC and short squeeze mechanics helpful, please hit that like button, subscribe to the channel for more unique stock insights, and let us know in the comments what other hard to borrow stocks you'd like us to analyze next. Outro music fades in.